Thanks for tuning in to Countdown. My name is Neeraj Shah, and bring up the markets for the benefit of our viewers. The Nifty Bank has just had a bit of an uptick maybe some bit of an uptick in the last few minutes of trade because of SBI. We're lying flat though. The Nifty Bank, as I was saying, a small bit of a pullback, a pushback really. That's still being sold on, but SBI 5% higher. It's not the heaviest of the weightages on the Nifty Bank, but still has some bit of bearing, and therefore this move led to some bit of an impact on the Nifty Bank as well. Similar pattern, a sharp rise, just a bit of a pullback. After some time, the numbers probably not as bad as or pretty much in line with what the estimates were as far as the asset quality goes, and therefore 3.5%, as somebody was saying, the losses were contained to a particular level and not go beyond that. So that stock is up about 3.5%. But the Nifty heat map will come up on your screen. Before I hand it over to Darshan for the liquid universe, the heat map will tell you what's really happening. Fair bit of green on the screen, even though the markets are lying absolutely flat. And autos and financials have bounced back today. So Tata Motors, Bajaj Auto, and Ashok Leyland is not out here, but that too did very well. And look at the financials. Bajaj Finserv is up. Bajaj Finance is up. There is strength in a couple of banking names as well. Indiabulls Housing marginally in the green. So selectively, financials and autos in particular, have done really well for themselves. State Bank of India right out here, 3.5% up in trade today. Post the numbers, a bit of a positive reaction for that one as well. So that sums up the activity. The market breadth slightly better than what we were seeing yesterday. But Darshan, what about the liquid universe? Yeah, so basically on the liquid universe side, and I'll get to FNO after that. Look at PC Jewelers and the spike that it's just had. It's moved up 15%. I think the spike has just come in PC Jewelers. If you can pull the, yeah, it's just moved up. There is 8K Miles, which is up another 15%. After falling 40%, Strides is up 12% in today's trade. Out of the ban, JP Associates is up 9%. Balrampur Chini is up almost 9%. I think sugar as a pack is doing extremely well in today's trade. Nagarjuna Construction, Reliance Communication is up in trade. Strong commentary by Ashok Leyland Management in the in the analyst call, that is doing well. Bajaj Holding, Radico Khaitan, Magma, FinCorp. These are the counters that are doing well in trade. Now, if you're looking at, I think it's a Bajaj day because Bajaj Finserv, Bajaj Finance, Bajaj Auto, Bajaj Holding, all of them are doing well. Now, on the FNO side, what we're seeing is the fact that 10,500 continues to be the big support for the market. 60 lakh shares is the open interest, total open interest build up here. If you're looking at, that's on the put side. So there is significant amount of, no doubt, call writers are heavily writing at levels of 10,500, 600, 700 and 800. But at this point of time, 10,500 seems to be the big support for the market. Call and put side, there's nothing much happening in terms of open interest. But if you look at some of the stocks in which high open interest build-up is seen, there is Berger Paints, which has moved up on 40% open interest build-up. IGL has moved up on high open interest build-up of 30%, and Page Industries has moved up on high open interest build-up of 30%. Two companies which came out with numbers today, heavy shorting seen in Bharat Forge post the numbers that came out, and heavy buying seen in SBI post the numbers that came out in trade. So that's the broad trade setup. Market is range bound, but 10,500 continues to be the big support. Neeraj, 60 lakh shares, if that is broken comprehensively, you can just imagine the amount of unwinding that could probably come in. Because if we can get the total open interest FNO chart of all the series, you can clearly see, and if the total open interest across all series, there you can see one line will stand higher. This is the open interest change today, the total open interest, that is where you can come to see what exactly is happening. So that's where the 10,500 put has 60 lakh shares. So that's something I'm watching for, 10,500 closely. If that gets taken out, you can expect at least one round of heavy selling that could come in. Okay, let's wait and watch. The futures and options position seems to be suggesting there. Okay, let's get a management on board. We were talking about numbers. Aster DM Healthcare reported a threefold jump in its March quarter profits, while its margins expanded to 9%. What have been the key factors for a healthy quarter? Let's ask the management. Joining us on the phone line is the chairman, Mr. Azad Mupin. Good having you, Mr. Mupin. Thank you so much for taking the time out.
How are you?
Very well, thank you so much. How would you sum up the quarter and the couple of quarters post-listing as well? And how has FY18 ended as a year for you?
Yeah, 18 ended very well. In fact, we have a revenue growth of about 13% with the EBITDA growth has been significant, 79%, with the PAT also has grown up significantly, 189%. The revenue is 6760 crores, the EBITDA is 651 crores, and PAT is 282 crores.
So what contributed to the top line growth? Because we don't, firstly, I just wanted a comparable number for the fourth quarter, because can you tell us what the growth on the top line, bottom line and EBITDA has been on a fourth quarter, because you've just given one quarter, there's no comparable number on the fourth quarter number.
So what I gave you was not on quarter, this was on the annual actually, this is for the year. I was giving this growth or whatever I gave was for the whole year actually.
We are aware of that, sir. We are aware of that. Just wanted a comparative number, because you've done revenues of 181, almost 1784 crores on the top line for the fourth quarter. What would that be comparable to in the last year? What's the revenue growth on the fourth quarter last year?
Yeah. So the issue last year is, as you know, there has been a lot of write-offs, and so there is not comparable with the quarter four of last year. So that's the issue. Last year we had this issue of write-offs, receivables in Saudi, and so if you compare with that, I don't think that will give you a clear idea.
Okay, you've done an EPS of 5.75 this time around compared to 2, so that's a healthy growth. What can we expect in FY19? What kind of EPS number can we see in FY19, and what kind of revenue and margin expansion can we expect?
Yeah. So, see, as you know, I can't give a guidance, but we have been growing quite well in the last 10 years, and we have significantly grown, and couple of years have been issues, but that growth trajectory has again come. This year we have grown like that, and the margin also it's likely to expand from whatever we had this year, because the capacity utilization, we still have unused capacity which is being ramped up, and the margin as well as the capacity utilization both are likely to increase this year, and we hope that the 19 will be definitely better than 18.
Can you give us some numbers, Mr. Mopen? The reason I ask this to you is almost everybody who's tracking your company is talking about 2 or 3 things to track. One is whether the margin recovery in the GCC business across formats will be evident in FY19, and if so, what numbers? So that is one. And 2, if you can give us some color about the ramp up in the Indian operations, especially as per Kochi's key metrics.
Yeah. So Cochin, we are now doing if you look at the occupancy level, it is around 62 now, and we hope that this can go to 70% this year. That is something which we are confident looking at the growth so far, and the margins also likely to go up, even though there is a challenge of the salary increase in Kerala. We are likely to have a better margin than last year because the efficiencies will kick in, and we are also planning to the tariffs will take care of the increase in the salaries. So overall, if you look at, we have this year the opportunity for ramp up of many of the facilities in India as well as GCC, and we think that there could be a significant improvement in the overall profitability.
I just have one question, Mr. Mopen, and that is the margin recovery in the GCC business across all the formats. What kind of margin recovery can we see there in FY19? GCC.
Yeah. So, 1 second. Let me just have a look at that. So, see the margin recovery could be around 2% if you look at, we have hospital, clinics and pharmacies in GCC, and we hope that there could be a recovery of about 2% in the margin in GCC.
Okay, so what can we expect for FY19 for your Gulf operations and India operations? where will traction come in from?
Yeah, so the India presently it is doing 17% and the GCC is about 83%. So that's a split this year. So we think that this will go to somewhere about 17% for India. The India growth will be taking it to about 17% and the GCC, I mean, another 3% growth in India will be there, which will be 80-20. That's what we feel.
Okay. Wish you all the best for that, Mr. Mupen. Thank you so much for taking the time out and all the best for the year ahead. That's Aster DM Healthcare, hoping for margin expansion in the GCC geography, as well as ramp up of some operations in Kochi. Sanand is probably priced in, so I didn't bother asking him that question. But the stock 3.5% down in the session today. What else? You know, a couple of pockets I think Darshan has highlighted most. Just impressive what Ashok Leyland has done today. It's bounced back and bounced back very, very smartly in the session today. So up about 5.5% after the slam dunk that it took in trade yesterday. That is one. Two, sugar. And those stocks have jumped up and jumped up quite meaningfully today. Another 9% for Balrampur Chini. Clearly the markets are pricing in some swaps that will come in from the government side. In fact, here out a conversation with Narendra Murkumbi, wherein he talks about the 2 or 3 points which, if done, could really work very, very well for the industry. He's the outgoing vice chairman at Sri Renuka Sugars.
Idea like this would be tried for the first time as far as I remember.
Okay.
It would entail, mandating mill not to sell below a certain price. So it's a kind of bottom to the domestic price. I think today domestic prices are between 25 to 27 rupees ex mill. So the number being talked about is 30. That's pretty significant increase in over the current price.
Okay.
And it is, where is the genesis of the stress is because the government fixes prices. And now the FRP is almost equal to the SAP. There's not much difference between the two. So across the country, the cost of production is about 32 to 34 rupees, whereas the current sugar price is 26. So anything that brings the domestic price of sugar very close to the cost, that means the efficient mills will again start going back into profitability. So in that sense, it's a very significant, I think we have to wait and watch. All indications are that the government will move fast now, because as you said, arrears are about 25% of the total cane price payable for the last season. So out of about 80,000 crores, 20,000 crores is yet to be paid.
And there is no way that in a pre-election year, the FRP or the SAP will be brought down meaningfully, because that's anti-farmer, so to say. So you would have to essentially up the ex-factory price or some other measure in order to reward the mills or alleviate the stress, but not cause stress to the farmer, I presume.
That's right. I don't think reducing the cane price right now in the short run is an option. Longer term,
because of the political compulsions or otherwise? Well,
also in a sense, it's a matter of contract, right? When you announced a price when farmers were planting cane, now when they have received the cane, this is not the time after you receive the product to reduce the price.
Okay.
So I think going forward in the long run, probably, we already have a revenue sharing formula. Dismantling the FRP or capping it at the current level is a medium-term to long-term solution. But I think those solutions will probably have to wait till after the general election. What is required immediately is to solve the immediate problem of arrears and negative profitability. And I think these measures, if they go through and they are actually implemented by the government, could be very, very significant.
I was reading somewhere that ISMA is asking the government to bear a part of the FRP. In your experience over the years, when you've seen countless such measures being suggested to either of the governments, as the case may be, do you think something like this could be accepted at all?
Well, in a way, government always bears part of the burden. But typically it's linked to, industry doing its bit, whether it is by exports, increasing ethanol supply. So there is also a responsibility imposed on the industry to respond. And in the past, that's how surpluses have been tackled. We've exported our surplus, we've converted part of it into ethanol. That's how the surplus gets solved.
Would measures like an interest subsidy, for example, small measures at that, I know every small measure is also a help, but do these meaningfully change, or would we need a couple of drastic measures, as you said, one which was the buffer stock, or two, this ex-factory price, which, as you said, hasn't been tried out in the past, but maybe for the first time. Are these the need of the hour?
I think the latter is the need of the hour. We already have also an export kind of quota. The exports plus whatever is done in terms of shoring up the domestic price. I think those are the two most significant measures.
Okay. Lastly, what about the global cycle? I mean, yesterday or day before, somebody messaged me about how on the global bourses, the raw sugar prices have climbed a bit, NIBOT, etc. What are your thoughts here? You look at these cycles very closely, hence asking you.
Well, sugar prices on the global market have recently touched a 3-year low last month. And I think they are rebounding from there. There is a lot of concern about weather in Brazil at the moment. And as you know, India and
Okay, the IOC numbers are out currently. It seems not a bad number, at least on the top line front. Revenues were seen at 1.17 lakh crore, is coming at 1.37. So on the top line, definitely there is a big beat that's coming. Profit 55 is much lower than what it was, so probably there could be some bit of one-offs that could be there on IOC. We'll try to get in more details, but as of now, this is the only detail that we have in terms of the numbers. So IOC, it will be very important to see the gross refining margins that would come out. Our estimate is $8.2 per barrel. So IOC is reacting positively. The top line is a beat. We don't know what the margins, the EBITDA is. We'll try to calculate it. But I think it's a bit. Avinash, any view on IOC? I think the numbers have just come out. The numbers, I think you also don't have access, but any view on IOC as such?
I think, Darshan, I think clearly what kind of GRM numbers are thrown up, that is going to be a much more crucial number to watch. And I think going forward, what kind of numbers, the company manages to show going forward, because the kind of price in crude prices, I think clearly would ensure that there could be a kind of a, resistance for GRMs going forward. So I think
so I've been told that the GRMs are 8.50, 8.49 versus the estimate of 8.2.
No, these numbers definitely look pretty good. I mean, expectations were that the GRMs could be much lower. But probably, this could have happened because they could have had the benefits of some inventory gains. But otherwise, going forward, whether they are able to sustain these margins, I think if they are able to do that, Darshan, then definitely, the kind of price we are seeing possibly could see a further re-rating. But my sense is, I think crude prices beyond $80 a barrel is going to be definitely a little bit of problem for most of these OMC companies.
Okay. And let's get across to the SBI chairman as he's addressing the media post the numbers.
The number in terms of the loss incurred by the bank during the quarter and the year may look big, but what we have to look at is that what is the strength of the balance sheet, and that is where I would like to draw your attention. So first thing is that last year we completed merger of 6 banks into SBI. This is the first year of merger. And in a way, the performance is not of SBI alone, but it is the performance of 7 banks. That is what has to be kept in consideration. And if bank has successfully merged 6 entities in 1 year, that is something which speaks about the quality of the management bandwidth and the resilience which State Bank of India has. Second is that the performance has not only been impacted by the loan loss provisioning, but there is a 6,000 crore mark-to-market loss in the last 2 quarters, which is something very unusual. And then the amendment in the Gratuity Act in the last week of the March, so 900 crore bank had to provide for the March quarter for the gratuity. So the biggest question which always comes to everybody's mind is what is happening on the NPA front. So let me confirm to all of you that as far as the recognition of NPAs is concerned, that has been completed and we are fully compliant with the framework issued by Reserve Bank of India on 12th of February. If you look at the provision coverage ratio, it has gone up by nearly 500 basis points. And considering the huge amount of NPAs which were recognized and provided for in the last year, this is remarkable. The NCLT 1 list, which again question comes very often, we have provided 56%, but our estimate is that the loss will not exceed 50 or 52%. NCLT 2 list, the provision coverage ratio is 75%. And as I mentioned, that all taken together without the accounts which are under collection, the provision coverage ratio is more than 50%. And if we take into account advances under collection, it is nearly 67%. So the PCR which bank is holding is amongst the best in the industry as of date. And that is what the strength of the bank lies in as far as the future is concerned. And despite huge provision made for loan loss, employee benefits and mark-to-market provision, the capital position continues to be strong and Tier 1 is 10.36%. So this has been helped not only by the infusion of fresh capital, we did a QIP as well as government gave capital to the bank. The management of credit risk weighted assets, that has yielded this strong capital position, and credit risk weighted assets are down by 720 basis points. And this approach will continue where we will use our capital very efficiently. We do realize that it is a scarce resource, but the entire bank today is geared up with this thinking that we have to be very mindful of the fact that the risk reward metrics should be in favor of the bank. Other than corporate banking, where we know that what the challenges bank has faced, the bank has performed very well as far as the retail banking is concerned, and it continues its domination. We serve 1/3 of the country. That is the number of accounts which a state bank serves. The transaction banking unit, which covers government business unit, merchant acquisition business, cash management product, it has done fantastically well, and despite so much competition from the fintechs, new players, the state bank has complete domination as far as the digital banking and the payment space is concerned. The number of transactions which are now happening on the alternate channels, it is 80%. Again, only 20% transactions are happening in the branch, and that number is again progressively going down. Another point which I would like to be noted is the portfolio is now very well diversified. Of our domestic book, 57% is now retail and 43% only is corporate. And as I mentioned, that there has been a conscious effort to improve the risk-weighted asset, credit risk-weighted assets. So within that 43% also, the share of AAAs, AA's, investment grade, that has consistently gone up. The benefits of merger and a couple of changes which are under implementation in the organization, and particularly the reorganization of the corporate banking, the reorganization of the project finance, the way we handle project finance, the way we handle the stressed assets. This exercise will be completed by 31st May, and I believe that the organizational structure which we have now put in place in the bank will do a couple of things. Number one, the corporate, we no more view it as a corporate to whom we lend money and use it to increase our balance sheet size. Each corporate, we view it as a large ecosystem, and bank earlier also was consciously making efforts to capture that large ecosystem, but this focus will be much sharper now. All these stressed assets are moving to stressed asset resolution group. That will leave our corporate accounts group and newly named commercial credit group, CCG, sufficient time to look for good quality assets. And as I said, that wherever our expectation of risk reward metrics is met, we will pursue all those opportunities in a big way, and we are all set to again come to the growth as far as the corporate credit is concerned. But not to forget that retail engine, which is firing on all cylinders, it will continue to do that. There are a couple of high importance projects which have been completed in the last year, nearly completed, not completed, or will be completed this year. One of them is our project Lotus, where a world-class application, consumer-facing application, has been rolled out. I don't think in India there is any application which can match today. Similarly, the CRM is in advanced stage of implementation. Almost 70 to 75% work has been done, which gives again tremendous advantage to the bank in terms of customer one view and the ability of our people at the branches to cross-sell and upsell. And another major project which does not affect the front end is OFSA project, which enables the bank to work out the profitability at a very, very granular level and manage the risk. Any organization, for it to succeed, is needed the HR. And there again, a very complete revamp of the way we train our people that is again being implemented, and the focus is on developing the leadership pipeline. The focus is on improving and enhancing the skills in the risk management. The focus is on improving the technology and innovation in the bank and continue to maintain its leadership. All our subsidiaries have performed exceedingly well. They hold large value which is waiting to be unlocked. And we have plans to unlock that potential and value in the current year as well as the next year going forward. Just to summarize that when we look today, we speak from the strength of State Bank of India. We have put past behind us. Last 3 years have been very challenging, but in any organization's history, these type of situations do come, but what matters is the capability of the organization to meet those challenges and emerge stronger. So today what you are seeing is a much stronger State Bank what it was 2 years ago, and the resolution process, IBC, which now we are starting to see the benefits, that gives me great hope that the RBI framework of stressed asset resolution, which is a 12th February circular, the IBC with all the initial hiccups, if we forget that, and the risk governance architecture which has been strengthened in the bank. So we are poised for growth now in a risk mitigated manner. So these are my opening remarks. Then we will do a quick presentation, and then I will take the questions. Yeah.
Okay, and there is going to be a presentation, which of course we can't stick with. Maybe during the Q&A we'll cut back to SBI and some important questions will be asked. But I think let's bring up that stock today, because as we were talking about it before as well, it's gone up ever so marginally. It stayed up. The numbers probably lower than estimates on the bottom line front. On the other parameters, just met the course. Avinash, that's been the standout this quarter, right, for a bunch of banks, corporate-facing banks, and I would club SBI in that bucket, because the numbers are poor, but maybe not as bad as some of the people might have been fearing. The resultant reaction, the stock has been positive.
Yeah.
Is that to say that the pain seems to be out? Because we've been hoping for the pain to be out. Management has been promising about pain being out of the system now for a long time now. We've heard the SBI chairman say that as well, that SBI is much stronger than what it was 2 years ago, but we've heard these things in the past as well. What would you as an investor do?
No, I think if you compare the other PSU banks with SBI, Neeraj, I think...
I'm comparing SBI with the other corporate-facing banks. I'm leaving out the other PSU banks. That's a different kettle of fish altogether.
No, these numbers definitely, on the bottom line front, definitely are much more than what the street expected. I think the street was expecting little over 4,000 odd crores, and I think the management now clearly hinted that this is a quarter which actually reflects the consolidated subsidiaries performance. So to that extent, I think the net NPA level of 10.9% is definitely something which is quite good. I think not much elevated kind of bad asset quality, and I think if the NCA NCLT issues actually get resolved, because that is one issue the markets are looking at it very favorably. Hopefully FY19, if we see a lot of these NCLT accounts getting resolved, then I think you could possibly see a lot of bad debt money coming back to the bank, and I think that would definitely further boost up the market sentiments. Most importantly, it would give in some respite to the bank, because a lot of bad assets, almost 10 to 11 companies in the LCLT where SBI has got significant exposures, would obviously mean that money coming back. So Neeraj, all said and done, hopefully the coming quarter should be a slightly better quarter, both from the deposit as well as the loan book growth front, and credit growth number I believe has been quite good, in fact much better than what the street expected. So despite the fact that the provisioning was quite large, the credit growth number is something to be cheerful about, and I think hopefully NCLT cases, if they get resolved, Bhushan has been a big positive for SBI because they had a large exposure there. So hopefully if some more NCLT accounts get resolved in the next couple of quarters, we could see a lot of re-rating, because the stock has been battered quite badly, and as you said, there are lots of value unlocking kind of initiatives which the markets are keenly awaiting. So obviously that is also one more factor which the market would keenly look at.
Okay, let's get in our technical experts on board. They've been waiting by patiently as well while the SBI management was speaking. Amar Singh, Head of Advisory at Angel Broking, joins us on the show, as does Sacchitanand, Uttekar, Deputy Vice President for Technicals and for Equity at Trade Bulls. Gentlemen, both of you, good afternoon. Many thanks for joining in. Amar, how are you approaching trade this afternoon? It's very flat for all the key benchmark indices. Would you trade any of the indices? Couple that up, of course, with your stock-specific recommendations for the day.
Yeah, looking at, I would say the indices, yes, we are seeing choppy trading session, but again, higher levels around 10,560, 570. That's a very strong resistance zone. So on the Nifty futures, one can go short in the range of 10,565 to 575 with a stop loss of 10,616 and a target of 10,485, 490 on the downside, because we are seeing some selling pressure also coming in at higher levels, whereas on downside, yes, there seems to be some protection. As far as stock specifics are concerned, the first stock to look at is Bajaj Finance. See, if you look at Bajaj Finance, it is really going against the markets, and technically looking at Bajaj Finance, the charts are extremely strong and bullish. So any pullback towards 2140, 2150, that can be a good buying opportunity with a stop loss below 2080 and a target of 2278 on the upside. And the second stock to look at is Coal India. What we're seeing in Coal India is that Coal India seems to have formed a bottom, and it appears that it could witness some further upside. So any pullback towards 273.74 can be used as a buying opportunity with a stop loss of 264 and a target of 292 in the short term.
Can we just pull up the stock price of Symphony? I think the numbers have just come out right now, and the stock would ideally have reacted negatively. Yes, 5% down, because the numbers are horrible. 31st March, which is for the quarter, the standalone numbers, they've done about 155 versus 180, so there's been a top line miss, and the bottom line has been lower as well, 41 or 42 crores versus 45.5 crores. So on a YOY basis, so this not turned out to be a very pretty quarter for a company that boasts of very premium valuations, and thereby the stock reaction on the stock, or the reaction on the stock, 6% down now, but with reason. And as we look at it, the end of the year, for a company which has been, I mean, where people have been pricing in growth northwards of 25% year on year, they've done 798 crores versus 764 crores. So no, the numbers are sub 5% growth for the year at a whole. So it's not turned out to be a very good quarter, and no wonder that the stock has reacted, down about 6%. Sacchitanand, a quick thought here on Symphony as well, and then of course couple that up with your index view too.
Well, if you look at Symphony, yes, I think the stock has just slipped below its 200-day exponential moving average, and the pressure is very much evident. But if you look at the broader structure, I think, looking at the broader structure, there could be a support somewhere close to 1450. So probably another 100 points of selling pressure could continue here. But if you look at the broader structure, I think it is still in a healthy state. So probably we may see this selling pressure getting absorbed, somewhere close to that. If you look at Nifty, yes, we are on the shorting side now. In fact, if you look at the overall formation itself, the market is a bit of range bound. and at a very critical support of around 10,500. But if you look at the momentum averages, the crossover that has happened in the short-term averages, it is indicating that this particular support may not hold for a while. So what we are expecting is that the fall could extend right up to say 10,470, and that's why short positions can be initiated. A stop loss can be placed at around 10,580, and the bias would clearly stay on the negative side until unless we don't close about 10,600 very confidently. So from that perspective, we have two more sell recommendations. One is on Titan, wherein after the results we have seen that the stock has really not found any support. If you look at the weekly structure itself, it is showing signs of divergence. A clear breakdown is evident on the daily scale, which is indicating that the move may extend right up to 880 levels. Short positions can be initiated here with a stop loss close to 925.30 on the futures. The second recommendation is a sell on Dr. Reddy. So the pharma pack has been in a very severe downtrend. Even after today's results, we saw that the stock is not able to hold itself above 1940, 1950 zone. So if you look at the overall structure on the daily scale, we have seen a fresh breakdown from an inverse pennant formation, which is indicating a price target of around 1840. From a short-term perspective, a stop loss can be placed around 1975.30, and short positions can be initiated for a target of around 1840 in Dr. Reddy.
Just hold on, Sacchitanand. We'll go on. There's a management that's waiting for us. It was a steady performance from Bharat Forge in the fourth quarter. A one-time loss led through profits dropping 50%. Let's discuss the quarter gone by with the Executive Director, Amit Kalyani. Also joining in is Yatin Mota from the research team. Yatin, take it away.
Thanks for that, Darshan, and welcome, Mr. Kalyani, and thanks for taking out the time. First of all, if you could, tell us what have been the growth drivers really for the fourth quarter. We have seen the export markets do really well for Bharat Forge. Do you expect such a momentum to continue at least for the next couple of quarters?
Well, let's start with FY18 quarter
Okay.
four. Quarter four, we had a pretty strong performance, driven both by domestic and by exports. Both have grown roughly, by the same amount, 6-7%. In the quarter, we've also, further received new orders, which take our complete, new wins to cumulatively about 1,500 crores in the recent past. And these are across passenger cars and the industrial segments. There has been an impact of steel price increase, which is a pass-through. So it has some inflationary impact on the top line. Bottom line has been strong. EBITDA was almost 29.8%. This time, our PBT before our exceptional item was 370 crores. There was an exchange loss this quarter relative to last quarter because of the swing in exchange, which is notional. And we have taken a provision of about 130 crores, which is towards some project expenses we had undertaken in the last 4 or 5 years ago, where we were investing in some new businesses, but we have decided to stop that, and this has been provided for. So without taking the one-time provision into account, I think we've had a very strong performance, probably our strongest performance ever. And we see a very strong demand from the commercial vehicle sector, both in India and in the US, passenger car sector across the world, and our industrial business continues to grow. Hopefully there are some green shoots on the defense side as well, and I think overall 2019 will be a very strong year. And we expect that with the current commodity cycle, especially on oil and gas being so strong, our oil and gas business also will continue to remain very, very buoyant and give us more opportunities for growth. So I think overall we should see a very strong growth this year and continue the growth path that we've been on as we head towards the next inflection point, which we're investing for currently, which is getting into the EV supply business. We've set up our R&D center in the UK that's fully functional, and we are now well underway working with several global customers on developing products and solutions for EV electric vehicles globally. And additionally, we have announced a capex of 175 crores to set up our new lightweighting center, in Andhra Pradesh, and additionally we will be investing about 400 crores in setting up new forging and machining facilities in Baramati. So this should allow us, lots of headroom for growth going forward and ensure that, we're able to encash all the new opportunities that are coming our way.
Okay, Mr.
So I'd like to
Kalyani,
say that on the balance sheet side, the balance sheet has strengthened substantially. We have, on a net of cash basis, we are at zero debt, below zero debt, and our return ratios have improved. And our overseas subsidiaries have also performed much better, and are, this year we expect that they will have a substantial improvement in performance as well.
Okay. And Amit, talking about the domestic business, you said that commercial vehicle business is doing well. Can we expect similar growth levels, which were there last year in FY19?
Yeah, well, right now we are seeing very strong growth. So based on the current picture, yes, it's looking like it should be as strong as before.
Okay. And what about the US markets? Do you expect the momentum to continue there? And also, if you could tell us, since you are talking about not only domestic commercial vehicle business remains strong throughout the globe, so not only the US market, how do you see the European markets also shape up? If you could give us some guidance on that front.
Yeah, I think the US will do well. Also, our new orders that we have won will ramp up, and the industrial side across the world will grow, because when commodities grow, then the whole industrial business grows. So I think these three drivers will provide a big boost to, continued boost to our exports.
Okay. And Amit, if you could give us an guidance for growth in the coming few quarters or probably FY19, and also tell us that since you are now net cash positive on the balance sheet, which is basically virtually debt free, how do you see the overall capex on the organic front in FY19, and also talking about potential acquisitions in the marketplace, be it local or global? How do you envisage growing through inorganic routes?
We are, as I mentioned, we are going to be spending close to 600 crores on capex this year, which is, which will be completely met by our internal cash flows. Our cash flow for this year would be in excess of 1100, for the last year was in excess of 1100 crores. So funding the capital expenditure is not a problem. At the same time, we are not going to go after just about anything that is available. We have a strategy in mind, and we will pursue opportunities when they fit into our strategy.
Okay, Mr. Kalyani, we leave it at that. Thank you so much for taking out the time and speaking to Bloomberg Quint. Neeraj, management commentary remains strong for FY19, but let's see, the stock is under pressure because of margin miss. Hopefully, the management says that they are on a recovery path on the operating front, and also the US and the domestic markets look quite buoyant.
Well, that's being seen across the board for a lot of companies. Yatin, thanks for putting that into perspective. Avinash tracks this one very, very closely. Avinash, Bharat Forge, you heard the commentary as well. You've seen the numbers too. What's your sense?
No, I think, Neeraj, one disappointment was, the margin. The EBITDA margins have actually come down by about 150 basis points. So I think one is the EBITDA margin miss, and secondly, this extraordinary loss of some write-offs on previous investments, I think, which was completely unexpected. But yes, if one were to look at the profits before this exceptional item, I think both on the top line, EBITDA, and the bottom line front, it's definitely a strong performance. And I think quite rightly, if the commercial vehicle business in India as well as the Class 8 truck business does well over the next, say, 12 months, we could see definitely, earnings as well as top line growing quite commendably. And since the stock has corrected quite significantly, from almost 750 odd levels to, below 650 levels, I would believe that, yes, if one were to look at the next 12 to 15 months, this could definitely offer a decent risk reward considering the kind of buoyancy we see in the domestic CV business and the US markets. So definitely, I think a long-term bet. But yes, in the shorter term, the markets would obviously look at the negatives as far as the margin miss and the exceptional loss is concerned. But typically, I think, these are blue chips which are normally not available at, attractive valuation. So I would believe that this is a good acquisition provided the timeline is over the next, say, 12 to 15 months.
Okay, we'll take a break at this point of time. But before we take a break, I just wanted to point out Jet Airways, a sudden spike that's come in. The counter's up almost 7% in trade. It's managed to move up. We'll discuss this with a guest. But on the other side, we'll get you Fab 4 stocks of the day. At 3:15, we'll tell you what dealing rooms are recommending and some closing strategies from our guest.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts. कितने plain और simple. Fog scent. Plain और simple white shirt को बना दे special और fashionable. Fog scent. New fashion wear for men.
Welcome back. Here you're watching Countdown on Bloomberg Quint Live. Let's take a look at some of the stocks that are buzzing in trade. Symphony is down 9% post a weak set of numbers. That is interesting to see. It's up. Oh, it's up 11% for a extremely expensive stock. It's not cheap by any stance. It's down 200 rupees. 8K Miles is locked on 20% upper circuit. PC Jewelers up 18%. Strides up 15%, JP Associates up 10%, Balrampur up 10%, NCC up 9%. Avinash, do these stock prices give you any confidence in the market? It's basically the high beta counters that have moved, but the larger quality stocks have been rather unmoved in today's trade.
No, Darshan, I think looking at the kind of stocks you mentioned, I think these are all stocks which are high beta counters, and it's quite surprising that on a day when the markets are down, we are seeing all these counters actually moving up quite significantly. I would believe Symphony, could see a little bit of more pressure, considering the fact that in the cooler market, we've seen a lot of competition from competing players like Bajaj Electricals, Voltas. So probably, I think, what kind of management commentary comes out and whether they are able to maintain these margins. If the margin compression continues, we could see a further sell-off, in stocks like Symphony.
Yeah, so one is the margins, and they've kind of at 31%. Well, the stock would be down 13%, I would presume, because for a counter which is trading at, so 191 crores is the consolidated profit for the year. It's market cap of 11,000 crores.
Yeah.
After this correction, maybe 10,500 crores or there are 10,000 crores. It's still trading at about 50 times or slightly northwards of 50 times for a company which has grown, what, 15% or 18% this year. Why would you pay such premium multiples?
No, actually,
the track record is good, Avinash,
yeah,
but somehow the delivery has failed this quarter and this year.
The top line miss has been quite, big. In fact, that is something on an annual basis also I think is quite, disappointing. So going forward, I would believe that, if the next couple of quarters they don't see a good spike up in the margins and the top line growth, these kind of premium valuations, Neeraj, are always going to be a risk, because clearly any disappointment on the earnings numbers, both on the operational EBITDA margin front and the bottom line front, could mean that there could be a significant derating even from the current levels.
Yeah. Okay, just pull up Dr. Reddy's, and that has a stunning move. It's managed to move up 7% in trade today. Numbers not the best of numbers. But certainly the counter has managed to inch up significantly, because if you look at the numbers, the estimate is almost a 150 crore miss on the top line, almost a 70 crore miss on the bottom line, and margins coming in almost 200 basis points lower than what was anticipated. But somehow the counter is up almost 7%. I think it will be important to see what the management has to say, but because the numbers didn't reflect a 7% move on Dr. Reddy's. Avinash, did you get a chance to see Dr. Reddy's numbers?
No, I think quite frankly, both on the operational front as well as on the bottom line front, the markets were not expecting a very strong number performance, but nevertheless, what kind of commentary comes from the management, especially on the US markets, would be, quite important to know. Frankly, a 7% move in such a short time. Post the results, the stock was down. So I think clearly markets are presuming that there could be some positive headwinds, as far as the US market goes.
Okay. Okay. Fair call. Well, certain pharma names certainly seem to be doing well. I don't know if they are finding their way to Yash's list of the Fab 4 stocks, but Yash Upadhyay Johnson with what's made it to his list. Good afternoon, Yash.
Good afternoon, Neeraj. So first up, we have Just Dial. The company came out with their fourth quarter results yesterday post-market hours, and all in all, they seem like a good set of numbers. Their revenues are up 10% to over 200 crore rupees. Their net profit, that has seen a big improvement of over 50%, and their margins, they have expanded by almost 500 basis points. So all in all, good set of numbers, and the stock is up 5.5%. Tata Motors is up 4% today. Now remember, the stock had fallen below 300 rupees yesterday, its lowest levels in over 2 years. But a good piece of news coming in from China. We had Bloomberg report earlier in the day that the Chinese authorities are likely to cut the import duty on luxury cars from 25% to 15%. So that is seen as a positive for this one. Suven Life Sciences had surged as much as 5.5% today. A big patent approval coming in for the company in New Zealand and Norway. Now this is the second such approval that the company has received in the last 1 month, and the patent approval is pertaining to a drug used in the treatment of neurodegenerative diseases such as Alzheimer's. And finally, we are also looking at Strides. So this one had fallen as much as 35% in the last 2 days after reporting a weak set of numbers. Some short covering seen in this counter. It's up almost 15%. Volumes too coming in significantly higher, almost close to the 10-time mark over the 20-day average. Back to you.
Thanks a lot for that, Yash. Before we get in Nipun Mehta, and I'm told he's joining us, but before we get in Nipun Mehta, a chart check from both our experts. I'm sure Darshan has some questions too. But Sacchitanand, if I can come to you on a couple of these stocks in the pharma space. Strides has shown a bit of a bounce back. There's a lot of social media chatter around that. People want to know what to do with that stock. The second one is Dr. Reddy's, which has surged almost 7% currently.
Well, on Star, we are of the opinion that 340, 345 could be a base, and the stock may start stabilizing from here on. And this is exactly what we have seen in today's session. After hitting a low somewhere close to 333, the stock has managed to come back. So I think, much of the pain from the counter is seems to be done, and we may see this stock consolidating within the range of around 350 on the higher, lower side and 450 on the higher side. So probably it will be more of a consolidation move. If you look at some of the oscillators, they are in the extreme oversold zone and indicating that there could be a good bounce back in the counter. So as of now, I think 450 is something that could be likely, and there seems to be a very strong base somewhere close to 345, 350 mark. So overall, the stance for Star is, there could be more of consolidation rather than a big reversal. If you look at Dr. Reddy, yes, it's a very surprising move. In fact, we are of the opinion that the pattern was indicating a fresh weakness, and I think what we have seen is just a short covering rally. So I will still give it a pass. I think 2050 is the breakdown level, and I think it is just facing some resistance out there. So it will be, we would like to monitor it closely now. And in case if this level is breached on a closing basis, and if the stock manages to surpass the 2050 mark, then probably this short covering move may extend right up to say 2100, 2140 levels. So I think given both the sets, I think Star still looks more promising. Dr. Reddy is still in that pain, so I would rather not take any call on Dr. Reddy now.
Amar, what did you make of the move in Balrampur Chini? Sugar as a space is doing well. Is this something that is here to stay, or a one-off rally today?
I would say that looking at Balrampur Chini, what we're seeing is that this stock has been in a continuous downtrend, and it's been correcting significantly from almost 180 levels. It's currently around 72 odd levels. So somewhere or the other, the stock has to bottom out, and that is what appears to be on the short-term charts, because there we are seeing some consolidation and also bullish divergence on the charts, and the stock was finding very strong support around 60 odd levels, and currently it's 72. But again, I would say somewhere in the region of 75, 76, it's again going to meet with some selling pressure, and we could witness some profit booking in the stock. I would say till the time the stock really doesn't consolidate above 75, 76, I would say stay away from this stock.
Okay, many thanks. We'll talk to you in a while, but Nipun Mehta joins us on the show now. Good afternoon, Nipun. What are you making of the market setup? The Nifty is going nowhere, but it's the mid caps and small caps that have started taking much leadership role. Is that something that gives you confidence, or what would you do? Stick with the large caps or play the mid caps now?
Good afternoon. I think yes, when you look at the indices, they've been moving in a fairly range-bound manner. If you take absolute short-term, they've moved up over the last 3 or 4 months. If you look at a marginally longer perspective, but overall, I think the kind of beating down that mid caps and small caps have seen is fairly significant. There has been a huge erosion in terms of value. Anywhere ranging from 10 to 20% to as high as 50 to 60% in a lot of cases. Our sense is this kind of beating down in both mid caps and small caps, at least on a bottom-up basis, brings a fair amount of value now. You've seen a lot of these mid caps which came out with reasonably good results as far as the March quarter is concerned, with very positive management commentary, which have at least clear growth trajectory for the next couple of years, having got beaten down significantly. So our sense is that there is now gradually value building up as far as mid caps, small caps are concerned. One needs to be fairly conscious and cautious about which sectors one looks at. But I think very clearly there is that opportunity that's gradually building up as far as mid caps, small caps are concerned. And one should look at starting to buy them gradually for at least a 1 to 2 year perspective.
Fair call. Well, so if you have that perspective, what can you buy? Let's ask Avinash Gorakshakar about that. Avinash, is there a stock that's on your radar today?
Neeraj, within the consumption space, we like a company called Dollar Industries. Now, this is a company which actually focuses on the innerwear segment and which can be compared to the likes of a Lux or a Rupa. This space has actually emerged quite strong and encouraging post the GST and the demonetization. And in fact, talking about specifically about Dollar Industries, this is a more than a 40-year-old company, largely operating out of East India. They have an integrated facility in Tirupur, and a large part of their business, almost 80 to 90% of their business, is driven by brand-driven products, especially on the men's and the women's segment. In fact, we have seen that now the company has made a conscious effort to get into the premium segment, and hopefully we could see a EBITDA kind of margin expansion over the next, say, 2 to 3 quarters. In terms of numbers, they are pretty well positioned. A top line of close to about 1,000 crores last year, EBITDA of almost 92 crores, and a bottom line of close to about 47 crores. This traction has been maintained in FY18, and the management has been very hopeful that new joint ventures with Pepe, especially getting into the premium segment, could actually help them get a sizable market share from the urban markets, which actually is where the growth potential lies. So clearly from a consumption point of view, our sense is that with an earnings growth of almost 18 to 20% placed for the next 12 to 18 months, one could definitely look at accumulating the stock. Looking at the kind of numbers, Lux or maybe a Rupa or a Lovable has actually thrown up. Valuations in this space are going to be premium considering the growth and the kind of healthy return ratio these players have been putting out. So from a longer term point of view, this is definitely a good player to look at.
Okay, we'll watch out for Dollar Industries, and since Navneet's not there, I have some stocks that probably will come into the F&O ban today.
Wow.
So we have a software that actually shows it up. So it shows that BEML currently has an OI build-up of 104%, and Reliance Communication has of 94%. So there is a high probability that BEML and RCom could be the entrance to the F&O ban list in trade tomorrow.
Okay, do watch out for these names. Thanks a lot for that, Darshan. Let's go across to Yatin then, since it's 3:15, so that time of the show when we get you what dealing rooms are recommending in the session today. Yatin, what are your channel checks suggesting?
Neeraj, Bank Nifty and PSU banking stocks are in the focus as far as dealing rooms are concerned. In fact, SBI is one stock wherein dealers have been constructive on. They are recommending a BTST kind of a strategy. They are expecting positive flows on the buying side from funds, and that is the reason why on the basis of F&O trends they have been accumulating shares of SBI. Apart from that, do watch out for the pharma pack and select mid-cap stocks. Balrampur Chini from the sugar pack is one thing wherein HNIs have been buyers in trade, so they are expecting some bit of bounce back as far as sugar stocks are concerned, and they continue to play the recent bounce back that we are looking at in sugar stocks. And ACC, that is also one stock wherein dealers indicate that on the back of fund selling there is pressure in select cement stocks.
Okay, so we'll watch out for all those stocks. We'll take one stock from that, and that is State Bank of India. Has come off the day's high. It's trading up almost 3%. Nipun, any view on the PSU banking space and SBI results? If you saw, if you could indicate, what did you make of the results? Is the worst over for SBI?
Well, indications over the last almost 3 years, when you look at the March quarter results for each of the financial years for PSU banks, indications have been that the worst is over, and probably no more provisioning or limited provisioning going ahead would be required. Probably that's the sense one tends to get in every March quarter, and that's the sense we seem to be getting in this quarter as well. I think the difference probably is the 2 or 3 observations that the management has made. One is the fact that there is expected to be 23% loan growth that the bank anticipates. I think for the largest bank in the country, that's something that's significant, and that could have implications on growth of a lot of the industries around where the banks, where the PSU banks have been lending. We are presuming here that probably it does not constitute much of retail lending, where there is a significant presence of a lot of the private sector banks as well as NBFCs. But so when you look at the public sector banks, if that's the kind of loan growth that's happening, couple that with the fact that there is at least for the June quarter and beyond, there is likely to be a fair amount of recoveries coming in. You've seen the Bhushan Steel recovery happening over the next 2 or 3 quarters. That's expected to strengthen balance sheets and ensure that there will be that incremental loan growth book, which is at least funded by these kind of recoveries that are there. Now, if all of these things do happen, probably one could take a view that the worst seems to be over. However, we'd be fairly cautious still if one looks at PSU banks, our sense is the strain does continue as far as the provisioning is concerned. Yes, the recoveries will help. Yes, probably the loan growth will help. But a lot of these weaker banks or banks with weaker balance sheets, in a scenario where interest rates are gradually rising, deposit rates will need to be increased, and obviously the lending rates would need to be increased. A lot of these weaker banks are likely to be finding it somewhat difficult to get higher rated borrowers that could be there. So we'd be still cautious as far as the PSU banking space is concerned, except maybe one or two larger banks which probably will participate the highest as far as the loan growth is concerned, as far as advances are concerned. The lower down, our sense is one still needs to be cautious as far as PSU banking space is concerned.
Okay, Neeraj, let's see Bajaj Finserv, and it's hit 6,000 today. It's a big move that's come in, trading at 6,000, fresh lifetime high for Bajaj Finserv. When the numbers came, Bajaj Finance was the one that rallied 7 to 8%. It rallied the next day. Bajaj Finserv numbers came in after market hours. It had a negative opening of 2.5–3%. But from that day, Bajaj Finserv has moved spectacularly. More than 10 to 12% is the gain that's come in, and it's a fairly large value stock. So on that basis, Bajaj Finserv has been clearly outperforming. Any view, Avinash? Bajaj Finserv, what's happening in Bajaj Finserv? Numbers were decent, but is this the move that we can expect in Bajaj Finserv?
No, I think, Darshan, my guess is, I think, in this stock, the consumer lending book has grown quite strongly, and I think the markets are obviously positive on the fact that management commentary has been extremely strong. The company expects that, growth numbers could actually get further accelerated in the coming year. And most importantly, asset quality continues to be extremely strong. So I think all said and done, despite hefty valuations, the market seems to be paying a very strong kind of multiple for these, stocks, typically where earnings visibility is extremely strong. So I would not be surprised that, in this stock, any dip possibly would always be used as an opportunity to build a stock like this in one's portfolio. These are not typically trading stocks, but stocks which could actually compound a good amount of wealth even over the next, say, 2 to 3 years.
What about, let's actually get in closing strategies, but while we are at it, Amar, let me first come to you. If somebody was long Bajaj Finserv, would you recommend staying long?
I would say the way the stock has taken off for the last 3 days from almost 5,400 levels to currently around 6,000, yes, definitely one should hold on to, because technically the stock is looking very strong on the charts. So ideally one should trail it with a stop loss below 5,700, and one should definitely hold on to the trade.
What about closing strategies? Sacchitanand, let me first come to you. Your top closing strategy.
Well, HCL Tech is looking interesting. In fact, the stock had seen severe pain in the last month, and if you look at the current formation, it is just stabilizing somewhere close to 900 levels. So what we are expecting is that there could be a strong recovery in the counter. 940 is the target that we are recommending. A stop loss can be placed around 890, and long positions can be initiated in HCL Tech.
Okay, Amar, what about you? Your top closing strategy?
I would say that I have a short in CEAT. Actually, if you look at CEAT, technically on the charts, it has witnessed a major breakdown, and also it's weak on the charts on different time frames. However, any pullback towards 1360, 65 levels, that can be a very good shorting opportunity with a stop loss above 1400 and a target of 1300 on the downside.
Interesting. As we get ready to close trade, Symphony is the top loser, 13% down, and this may not be the end of it, by the way. Let's wait and watch. But that one is looking like it will, it has a slam dunk, likely to maybe look set for more. I think the volumes too have jumped up. The other one that is really cracked the last few sessions is Mahanagar Gas, down about 6%. This month, I think, or the last 1 month has lost about 20% as well. What do the charts indicate here? One of the stocks, Mahanagar Gas, Sacchitanand, what do the charts indicate here?
Well, if you look at the immediate movement, I think the stock has hit the oversold state, and that's why we are expecting that the level of around 800, the stocks could start stabilizing. It has already been through a severe downtrend from 1250 levels. Relentlessly this particular stock was sold, and somewhere now it looks like stabilizing. So probably if someone has a short position here, probably this is the good time that one should, relook at the entire trend and book some profits here. But if you look at the broader structure, the broader structure will be really weak in case 750 is breached on a closing basis. So probably, this is a good time wherein one should start accumulating this counter with an expectation of a move above again 850. So yes, we are expecting that this level of around 800, the stock could start consolidating now.
Okay. Nipun, closing thoughts. Voltas was one, Symphony is other. These cooling solution companies seem to be coming out with misses in what they report in the quarter. Valuations expensive out there too. What would you do here with this pack?
Well, of course, there have been huge expectations from virtually this entire pack for whether you look at it as consumption or white goods, in terms of the kind of volumes that they have been doing over the last maybe the last few months, and this being particularly peak season as far as they are concerned. So when one looks at probably the June quarter results and beyond, at least generally the first quarter, at least for a lot of those cooling companies, yes, the June quarter is typically reasonably good. Our sense is with this kind of a marginal fall as far as profitability is concerned, probably some of them do become expensive, but this entire pack has been relatively expensive if one goes back over the last few quarters. But our sense is, given the kind of rural spend that's expected, given the kind of overall consumption spend that is expected, whether it is a lot of these FMCG companies and or these white good companies, our sense is volumes will continue to build, revenues will continue to rise, and margins are likely to be sustained over the long term. So despite higher valuations, our sense is this is one space one should continue to hold for at least the medium to long term.
Okay, Nipun, we'll leave it at that. Thanks for joining us on Bloomberg Quint. Neeraj, we need to start wrapping up the market. What's the trend like? The Nifty's managed to recover slightly. Some of the stocks have done extremely well. SBI, Bajaj Finserv definitely will be on your list. What's up?
Yeah, so that seems to be the case, Darshan. A flat close. We had a flat start, extremely flat start. It's turning out to be a flat close for all the key indices, mind you, the Nifty Bank as well. Bring up the mid caps and the small caps because the large caps have done what they have done. There's a bounce back at the small cap end of the market, which is where the market breadth could be slightly different than what the benchmark indices seem to be suggesting. I'm sure Darshan will bring up to speed with what's happening to the mid caps and the small caps. Let me take a look at what's happening in the large cap arena. Dr. Reddy is the standout performer, up about 6% odd. There is strength in Sun Pharma to about 2.5%. Select pharma names seem to have done okay. Bajaj Finserv 4.5%, SBI at 4.5% is arguably the man of the match today. And autos, Tata Motors, Bajaj Auto, Leyland not on this list but has done well too. And on the flip side, IOC 3.5% down. The numbers didn't look all that bad, to be honest, but OMCs have been under pressure. The bottom line numbers and maybe the margins were slightly a miss for IOC. We'll get to know about that in a bit. Ultratech corrects today. TCS corrects a bit today as well. ITC, Kotak Bank amongst others that have lost out a bit. So select private banks, IndusInd, Kotak, Axis Bank, etc. seem to be under pressure today. But if that is what's happening to the large caps, it'll be interesting to see what's happening at the broader end of the spectrum as well, because a clutch of these mid-cap names have been under pressure in trade today. And Darshan, what are you spotting at the mid-cap end of the market? We'll get in Darshan in moments from now, and he'll have the stocks on the wall, I believe, or Darshan, if you're with us, let's just try and figure out what's happening at the mid-cap end of the market.
Yeah, so I think the mid-caps have run up significantly in trade today. Look at the stocks like, PC Jewelers. Big up move coming in on PC Jewelers. You can see it's up almost 15%. There are other counters, 8K Miles, which is up significantly in today's trade. So it's been the day where, mid-caps have managed to rally significantly in trade. The other counters that I need to focus on include 8K Miles, which is locked up 20% in upper circuit. Symphony came out with a weak set of numbers. So Symphony is down almost 13% in today's trade. So that is trading rather weak in today's trade. The other counter just wanted to highlight Kitex. Kitex has been doing rather shabbily for itself. It fell almost 18% yesterday, today down another 4%. And Nagarjuna Construction and Praj Industries. These are the two stocks that I want to highlight, and Nagarjuna is up almost 10% in trade, and there is Praj Industries which has managed to inch up. Sugar packs doing well. You have Balrampur Chini, which is the only F&O stock in the sugar space. That one is doing well, but nevertheless across the board sugar stocks, DCM Shriram, there is counters like Dhampur Sugar, all of them seem to be doing well in today's trade. So that's the broad setup. Neeraj, Nifty is not done the best, but surprisingly SBI, Dr. Reddy's as well as Bajaj Finserv took most of the moves on the Nifty, but it's the day where it belongs to the mid caps.
Yeah, certainly do. Actually, the heat map or maybe the advanced decline ratio as well, very quickly. Actually, the rates are still changing, so maybe the heat map would be more pertinent. We have about 45 seconds. Mind you, the market breadth is positive, but the heat map should come up on your screen once again, and we'll just show you what's happening at that end. So, Darshan was speaking about what's happening to the mid cap end, but just a sum up of what the large caps are doing. Darshan, Reddy's excellent moves there. Finserv's, SBI, Tata Motors. Seems like auto has made a big bounce back today, and not too many losers. I think that's the key point. The losers like IOC and Ultratech are not the heavyweights.
Not all that bad, but surprisingly it's down almost 5%. Look at Sun Pharma. It's moved on the back of Dr. Reddy's. Pharma as a pack has been doing well. So Sun Pharma has moved up. Lupin has moved up in today's trade. That's what I'm spotting. Tata Motors, because of the China news in terms of reducing the import duty on foreign vehicles, that one has managed to inch up significantly. But the star of the day has to be Bajaj Finserv in today's trade, hitting the 6,000 level. It's moved on to a different orbit only.
Yes, and SBI.
Can you see Bajaj Finance anywhere? That's
about 2%. The second row. Yeah, that's about 2%.
But it's clearly Bajaj Finserv, which actually depends most of its value on Bajaj Finance. That's managing to outperform.
Certainly doing very, very well. So the mood seems to be good in the session today at close, even though it's a flat close, flattish close, more green than red. The market breadth, as we showed you, is doing very well. The turnover, Darshan, I'm interested in the turnover because the F&O turnover seemed high before 2 o'clock. And let's see if the F&O turnover has inched up further. Yep, 7 lakh crores on the F&O, NSE F&O. Cash market is okay, but the F&O volume certainly
is much higher than what it was there on Friday. Friday it was close to 5 lakh crores. It's inched up. I think a lot of activity on the mid-cap side today. That probably will be one of the reasons.
Yeah, that could be the case. And lastly, let's pull up the index contributors and just see what's contributed to the gains and the losses in the session today. So the gaining side, no surprise there. SBI right up there, and maybe ICICI Bank. Losing side, interestingly, no big newsmakers, I guess, Darshan. Just about heavyweights which have corrected a little bit par for the course. The newsmakers are all on the other side today.
Yeah, obviously, and SBI because of results. Infosys, there was no news, but Tata Motors had news. Maruti Suzuki clearly, after days and days of underperformance, has managed to inch up in today's trade. So nevertheless, a positive closing for the large cap and spectacular moves on the mid caps today.
You bet. What a bounce back it is. Final thoughts from all our experts. And Sacchitanand, I'll come to you first. Looking at this close and the way the small cap index has bounced back, does it give you some confidence or some heart, because otherwise small caps were getting butchered?
Well, yes, in fact, the selling pressure seems to be absorbed in some of the small cap and mid cap names, and clearly it is also evident on the index. In fact, we were anticipating this, that the mid cap index could be a surprise in this particular week. But if you look at the way Nifty is behaving, we are yet to see a firm reversal getting instated. So I believe that the close is more or less very flat. We have a spinning top kind of a formation on a daily scale, which is still indicating indecisiveness. So probably, we may see some more downside on the Nifty. That's what we have been talking about, 10,470, a level wherein we see this particular selling pressure getting absorbed, and probably then the markets could start stabilizing and a good recovery could be seen. So I think just the mid cap indices going up should not be a very strong case scenario. Nifty is something which should add meaningful force from here on as well, and we don't see it happening until unless Nifty is trading below 10,600.
Amar, what would your thoughts be?
Yeah, I would say that what we are seeing on the daily charts is that Nifty has moved in the oversold territory. So that's the reason we are seeing some pullback, and also 10,490, 500, that's acting as a strong support. But on the upside, again, what is likely to happen is around 10,590, 10,620, 30. That range, again, there's going to be strong resistance and some selling pressure coming into it. So Nifty is likely to trade sideways in this zone until the time it really doesn't consolidate. I would say it could be some sideways trading session for Nifty tomorrow.
Okay, Avinash, Sacchitanand and Amar, many thanks for joining in, gentlemen, and giving us your thoughts. Really appreciate your time, and thanks for speaking with us today. Well,
thank you.
That's the view from our technical experts. Avinash, your thoughts? Does this small cap bounce back today give you some confidence?
No, I think, Neeraj, selectively we have seen a decent amount of performances by these medium to small cap companies. But I think clearly, the way the large caps have been beaten down, I think I would say that the private banks are definitely an opportunity which could possibly see a further re-rating. I think looking at the fact the bounce has largely come in the PSU banks, clearly I would believe that one would like to have a mix of both private as well as PSU banks. At least for the next couple of quarters, I see the private sector banks outperforming, something like a Kotak or a IndusInd Bank. I think clearly deposit growth or asset quality growth, I think they would definitely continue to outperform their PSU peers.
Well, I should really appreciate you being with us for the whole show today. Thank you so much for taking the time out. Look forward, of course, to have you more often on this forum. And mind you, for people who are listening to this discussion and wondering for an investment idea, Avinash Gorakshakar has suggested Dollar Industries as a stock. But with that, it's a wrap on this edition of Countdown from Darshan and me and the team that put this show together. Thank you so much for watching.